Hi everyone, welcome to our new segment at Spotlight in Africa. In this segment, we will discuss variables that affect Africa's economy, finance, and capital markets. Today, the subject of discussion is gold and gold prices. We will discuss how gold prices in the last 2 to 3 years are affecting the African economy and also take a look at gold from the perspective of the investor. Gold has been making headlines for the last 2 years. We've seen record high prices, strong investor demand, and central banks around the world buying gold at levels that we have not seen in the last few decades. But we'll try to answer what is behind this rally, why investors are paying so much for gold right now, and perhaps should gold be a part of an investor's portfolio? So we will try to answer these questions and move forward and have a fruitful conversation for the audience. So stay along, and hopefully this is going to be an enjoyable conversation for you.
Absolutely. So for our audience, and just to level set, let's start with the foundations. First of all, why is everyone suddenly talking about gold lately?
That's a really good question. Right? The simple answer is performance. Gold has seen record high performance in the last 2 years. In 2024, gold gained roughly 25%. This is the best annual performance it's had since 2010. The rally continued all the way through 2025, and by January of 2025, we hit an all-time high for gold prices. And now, for many investors, this was a bit unexpected, right? Traditionally, gold is viewed as something to hedge against crisis or uncertainty, right? But recently, gold has been delivering portfolio protection and also strong returns at the same time. So this combination makes this particular rally a bit unique. So hopefully that answers, why everybody is suddenly talking about gold and gold prices. But, from the perspective of our audience and us being Spotlight in Africa, we want to understand from the African market, why should Africans care about rising gold prices?
That's a great question. Because, as a matter of fact, many African countries, in their case, gold is not just a commodity. It's one of their most important exports. And so when gold prices rise, every ounce exported generates more foreign currency. That means more export earnings, stronger trade balances, and potentially stronger government revenues if managed prudently. Think of it this way. You're selling the same amount of gold, but significantly receiving more for each ounce. And so national income will increase most likely without producing any additional output. And that's exactly why many African gold producing countries have experienced during this recent rally. But let's dig into a little bit more of what are the drivers of the recent rally in gold prices.
There's several factors at play here, right? Whenever we have a commodity like gold, which is strongly intertwined into the global economy, whenever there's a shift in price that's significantly high, there's variables at play there. But the biggest one in the last few years is the demand and the purchase of gold from central banks. Around the world, central banks have been buying gold at an extraordinary pace. And for the last 3 consecutive years, the annual purchases have exceeded 1,000 tons. Now, to just put that in perspective, the demand and the purchase, when it comes to central banks, the purchase of gold, to be specific, is something that they think of as a long-term strategy. It's not a short-term strategy. So if they're increasing their purchases within the last 2 to 3 years, that means they're probably going to continue to purchase more gold in the next 5 to 10 years. So this gives you an idea that gold demand, at least from the perspective of central banks, will continue to increase. Now, what makes it a bit unique this time as well is when central banks are purchasing gold at record highs, investors are also getting involved, which we will discuss a bit later on how that played out. But that's why the price of gold has seen a significant jump in the last 2 to 3 years. It's the central banks who are driving the demand of gold, which is translating to higher prices. Now, I know you gave us a bit on why Africans should care about higher gold prices, but now let's narrow down a bit and let's see which countries in Africa will be the direct beneficiaries of higher gold prices currently and going forward.
So typically the biggest winners are major gold producing countries in Africa. This includes Ghana, South Africa, Burkina Faso, Mali, Tanzania, and Zimbabwe. But mining the actual gold is only one part of the value chain. Historically, many African countries actually exported almost all of the gold that they produced, while all of the refinement, the certification, and the trading happened outside of the continent. That meant a large share of the value was captured outside of the continent. But the good thing is that today things are starting to change. Ghana is a good example. As Africa's largest gold producer, the country has taken steps to increase domestic participation and support local refinement. And so essentially their goal is to process more gold at home, create more skilled jobs, and earn more foreign exchange while keeping a larger share of the value chain. But countries don't only need to be major gold producers in order to benefit from this shift. Take Uganda, for example. It has increasingly positioned itself as a regional gold processing and trading hub through its international networks. And so this more generally reflects a broad trend that we're starting to see in Africa, where more governments are looking beyond just resource extraction, and they're asking how can they create more value from the natural resources that they're endowed with. And so the key lesson is that countries can benefit not only from mining gold, but also from refining, trading, transporting, and financing it if taken with a long-term view. So you touched a little bit on the drivers of the recent gold rally, and you mentioned central banks as one of the key players in that. Is this only about central bankers, or are there other players involved to consider?
No, not at all. I touched on it a bit earlier. Central banks are definitely the largest players when it comes to driving the price of gold because their demand, is significantly high when you look at the consumption of gold, right? Now, in today's world, it's used in some manufacturing processes, but the demand usually comes from purchases from investors, and this time around, central banks being the leader of that, right? Now, as I mentioned, few things at play here. Well, we've seen a rise in global conflict, unfortunately. There's a bit of tension when it comes to trade. There's a bit of uncertainty. So both institutional investors and retail investors are looking at gold as a hedge to these risks. Also a hedge against devaluating currencies globally. So no matter who is at the forefront of the global currency conversation and which currency will be the world leader, despite that, gold is always seen as a hedge for any risk. So whenever you have an uptick in global conflict, an uptick in uncertainties, you will see gold prices also increase because of the institutional and retail investor demand. Something to just add there, this time around, there is this other unique phenomena that's going on. Speculators are also seeing this as an opportunity, right? If gold prices in 2024 increase by 25%, this makes it a very strong candidate for short-term investors. I'm not going to call them speculators, but short-term investors to see the opportunity to enter the market and gain some of that high return. So the combination of these things are driving gold prices to record highs. Now, speaking of currency and gold being seen as a hedge against currency devaluation, what does rising gold mean for African currencies?
That's a good question. So in theory, rising gold exports can strengthen a country's currency. But here's how it works. Gold is usually sold on the international markets for US dollars. And when exporters receive those US dollars and bring them into the country, they often exchange it for some type of local currency to pay workers, to buy supplies, and to pay for taxes. Therefore, this helps to support the demand and the value for the local currency. The additional foreign exchange can also help central banks. They can build reserves with it, they can stabilize the currencies through the mechanism that I just mentioned, and they can also reduce external financing pressures. And so in particular for economies that experienced recent volatility in their currency, this could be a meaningful advantage if taken with a long-term view. And so you've mentioned that this is a really important moment as it pertains to the gold rally and what it could mean as far as windfall revenues and other implications. Is the current gold rally that we are seeing similar to other historical periods where there was a gold rally, or is this time a little bit different?
Well, you'd have to say it's a bit different, right? Many analysts do believe it is, right? Because historically, gold often sees short-term rallies, but it's not typical for gold to have multiple year rallies, right? And especially when you look at the retail investor participation and you step back away from the central banks and their purchases and look at who else is participating in attaining gold in the last 2 to 3 years, right? You look at ETF investors through their ETFs or retail investors coming into the purchase of gold. You also see institutional investors, but also sovereign wealth funds are participating as well. So the combination of, again, obviously central bank demand, but also these other investors who are entering or seeing gold as an asset that they want to own, and also, again, seeing it as a strategic reserve asset rather than just a simple commodity. I think, when you look at silver, also we're seeing record highs in the last 2 to 3 years, but that's the differentiating factor between gold and silver, where gold, there's this strategic reserve asset mindset behind the investor's strategy when purchasing gold. So yes, to make the answer a bit short, yes, this is a unique rally, and if the demand from central banks and retail investors, institutional investors continue, this rally, might continue going forward as well. Now, coming back to Africa and positioning gold prices to the African market, I know we've discussed a lot of the positives that come with gold prices being higher than usual, but what are some of the risks when it comes to gold prices and Africa?
You're right. It's not just an upside story. It's not just positive. There are risks involved. And one major risk for African countries is overdependence during this moment. If a country becomes too reliant on gold exports, for example, its economy can become vulnerable to future price declines. And we've seen this challenge before with oil-producing countries. A commodity boom creates opportunities, but it can also create complacency. And a related risk is what many economists call Dutch disease, which is when foreign currency inflows become too large to the extent where other sectors in the economy that may be more productive, such as manufacturing, or perhaps other sectors like agriculture, can become less competitive, relatively speaking. And so in other words, the gold boom can actually weaken economic diversification if policymakers aren't careful. A great example that is often cited is Botswana and its diamond reserves. It's managed to be prudent with its diamond revenues in a way that it supports its long-term economic development, investment in institutions, and education. On the flip side, Nigeria is often cited as a country that has struggled with its effect of resource dependence and has suffered during downfalls in the oil economic cycle. Now, we've said a lot during this segment so far, so let's wrap by narrowing down our insights into a few closing remarks. So I'll hand it over to you first.
Thank you. I think one of the most important things to kind of close this out is to say, gold has seen price rises over the last 2 years, right? And this is just more dynamic than just simple price increases. It reflects the changing behavior of central banks, geopolitical uncertainties, concerns about inflation and debt globally, and shifting interest rate expectations. Now, also recognizing that gold is seen in today's global market as a diversification tool, right? And not just a simple commodity. For long-term investors, portfolio managers, or anyone who's trying to understand global markets, the recent performance in gold offers an important lesson that, when investors, even to a degree, governments are faced with uncertainty, they do tend to see the value in gold. So that's something to note for the future. And looking ahead for investors is to understand that today's global financial markets are ever evolving. There's always change that's happening, right? So yes, to try to understand what has happened previously, but also to be well prepared with what comes next, and not necessarily relying too much on the past, but understanding the variables of why prices increased and how those variables can and will change going forward. So I'll also give you the opportunity to close it out for us when it comes to the segment of gold and how African markets are evolving with the price changes of gold.
Thanks. So as you covered, gold's rise is often discussed as an investment story. But for Africa, it's also an economic development story. It's a story about export revenues, foreign reserves, currencies, fiscal policy, industrialization, which is extremely key, and economic strategy, but from a long-term perspective. And as gold continues to play a larger and larger role in the global financial system, understanding Africa's position within that story may become increasingly important for investors, for policymakers, and frankly, for anyone interested in the kind of continent's economic future. So with that said, hopefully you learned a thing or two about the gold's rally in recent years. And please catch us on the next one, where we'll discuss another economic story as it pertains to Africa. Thank you, and see you on the next one on Spotlight in Africa.